So my background, I born and raised in Toronto, moved to California about 8 years ago, and started investing in Hamilton of all places. Started buying a duplex, my first rental property, and then from there, condos, single family homes, townhomes. My portfolio grew sizable in Ontario, but then finally, after a few years, in the US, I started establishing myself in terms of credit, tax returns, and then now I was able to qualify for mortgages. I was able to move forward with some asset acquisitions in the US. I started investing out of state. That was just kind of natural for me, already investing in a different country. So I started exploring other states. Ohio became my initial investment state. Started buying single family assets, price points, sub $100,000, 1% plus rule, all that good stuff. North Carolina, started acquiring properties out there as well. I think I'm in a unique position because most people operate either one side of the board or the other. I mean, for me, I've now done business on both sides, and I kind of see perspective, understand the rules of engagement in both Canada and US.
All right, everybody, welcome back to the Canadian Real Estate Channel. I'm Adam J.D. Martin, and today I'm pleased to introduce you guys to a man that I met in Las Vegas at our Vegas Entrepreneurial Experience, Thomas Lorini. Thomas, welcome to the Canadian Real Estate Channel. And I thought this would be a great opportunity for us to introduce you to the audience and let you share a little bit about your story and why people should maybe be interested in kind of some of the things that you wanted to talk about, like investing as a Canadian in the US. But first, I think we should get started on a little bit of your background. So Thomas, why don't you give us your background?
Sure, absolutely. First of all, thank you for having me here on your show, Adam. It's a pleasure to be here. And as you mentioned, we met at that Vegas event four years ago. Time flies, my friend. It was a good time. A lot of people from Canada were there. A good time indeed. So yeah, my journey started. I want to say back in 2004 when I bought my first property and I house hacked before house hacking was a thing. And it took me about 5 years, Adam, to really get into real estate investing. My environment that I kind of like friends, family, my work, immediate network, we're not investing in real estate. I had to immerse myself into an environment where I basically was educated. So I paid to join a network. And from there, I quickly learned, the ins and outs and formulated a power team and started investing in real estate. And that really got going in 2011. So my background, I born and raised in Toronto, moved to California about 8 years ago. So when I really started going in real estate was 2011 and started investing in Hamilton of all places. It was about an hour drive from where I lived. And the price points were relatively attractive compared to Toronto. So I started buying a duplex, my first rental property. And then from there, condos, single family homes, townhomes. So I started scaling a portfolio of assets, and I just basically no crazy strategy at that time. Burrs weren't even on my radar. It was basically buy and hold, put 20% down, buy and hold. And just kind of accumulate this portfolio on my own. It was a slow growth, maybe one property every year, every other year. And then the plan was to move to California. So that was the switch where it basically forced me to get into real estate full time. My background is mechanical engineering. I was in the manufacturing industry for many years. I ran my own machining company. So I've worked for other people. I've worked for myself. And finally, I realized, this move to the US forced me to kind of sell my business and then figure out what's my next step. And because I had started, this real estate portfolio, I figured it's a good time for me to get into real estate full time. And from there, things just started to happen ultimately. I was forced to network. I really used my phone, picked up the phone and networked. I started connecting with people back in Canada. And I started to continue to grow a portfolio back in Canada initially because, I knew nobody in the States. I had no credit in the States. I had no contacts in the States. So I moved there more for the lifestyle and so forth. And the goal was to start investing in the US, but took some time for that to really happen. So until that happened, I kind of leveraged my network and continued to grow back in Canada. So that helped me to scale, and I continue to do things from afar. So I mean, doing things virtual, I really created a really good system for myself. I was able to continue to scale. I ended up doing joint ventures. That became a very, very, I guess, common thing for myself. I wasn't able to qualify being a non-resident for mortgages. So my partners were, and we just continue to scale from there. So I started getting into multifamilies, and then, and in different markets from Hamilton, Cambridge, Windsor, outside of Ottawa, London and so forth. So my portfolio grew sizable in Ontario, but then finally, after a few years, in the US, I started establishing myself in terms of credit, tax returns, and then now I was able to qualify for mortgages. I was able to, move forward with some asset acquisitions in the US. California being a high price market, similar, I would say, political environment as Ontario. I started investing out of state, and that was just kind of natural for me, already investing in a different country. So I started exploring other states. Ohio became my initial investment state. Started buying, single family assets, price points sub $100,000, 1% plus rule, all that good stuff. North Carolina, started acquiring properties out there as well. But also in California, I mean, that was my local market. So not only was I got licensed as a realtor, but the family business, my wife's side of the family, my father-in-law is a land developer and a builder. So we started building, we built subdivisions and land developments. So that really got me entrenched on that whole side of the business as well in real estate. And now over the course, of the last number of years, I mean, I've got a portfolio on both sides of the border. And at this point now I'm helping Canadians understand and train them and educate them on investing in the US.
Yeah, that's really exciting. It sounds like you picked up steam pretty fast and leveraged some solid networking skills to get there. What are some of your biggest challenges been in going from that sort of unpracticed, unfocused sort of drive where you sort of happened in real estate into turning that into a fully processed with operation with standard operating procedures? Like, what were some of your challenges in between there?
Yeah, I mean, I wasn't trained per se with a coach. So I kind of learned on the go. So I joined a network. I kind of got some relative training, but through networking, through trial and error, through just taking action, I kind of learned. Had I looked back and maybe more formalized things and got a coach initially, it may have kind of streamlined things and helped me create better systems. So I probably could have kind of cut the amount of time I got involved. Because now with my students, it's more like, hey, this is step number 1, this is step number 2, this is step number 3. Don't do step number 3 until you've done step number 1 and 2. But without that, I was just kind of doing a little bit of everything, and trial and error and figuring it out. I was able to do things. But I would say that's probably, looking back, I mean, it wasn't ideal, but it's just a step forward. So maybe 2 steps forward, 1 step back. 2 steps forward, 1 step back was kind of like my MO for a long time. But then, networking has really kind of ramped things up. One of the main things in real estate we know is leverage. And when we think of that, we think of leveraging money, capital, right? The banks, they'll finance 70, 80%. So we're leveraging their capital. Well, what I found was leveraging other people, their time and their skill set. So for me, leveraging other people's in that capacity, in that way, has been monumental. So I don't necessarily have to know everything. I don't necessarily have to do everything. If you're able to partner strategically, everyone wins. And then you can get into larger deals. There's more meat in the bone to go around, and it just makes a war worthwhile. I mean, you probably experience this too when you're doing these smaller deals, a single family, a duplex, where you're grinding hours on it. It's all on yourself. And then the payout may not necessarily translate into that much compared to doing the same amount of effort into a much larger deal, taking a smaller piece of the pie. However, the return is substantially more higher.
Yeah, I definitely agree with that. There's a lot that can go wrong when you don't have a lot of safety net below you, right? And often more units gives you that safety because you can finish a unit, rent it out, have a little bit of security in that. How have you been managing lately with sort of some of the volatility in the markets? Have you found that being an international investor is a more volatile thing, or is it actually offering you a little bit of redundancy?
Yeah, I think I'm in a unique position because most people operate either one side of the board or the other. I mean, for me, I've now done business on both sides, and I kind of see perspective, understand the rules of engagement in both Canada and US. So because of that, I mean, I've seen how it's been, I mean, better at different intervals for one side of the country or the other side of the country. So let me put this into perspective. So like interest rates have risen in both countries over the last year, right? So that's kind of slowed down the market in general. However, I had a conversation recently about this. The Canadian market is much more sensitive to the interest rates, mainly because of the terms of the rates are usually about 4 or 5 years. Versus in the States, people lock in their rates for like 30 years. So when interest rates are fluctuating or increasing substantially like they are this year, well, if the majority of people have a locked in rate for another 25 years, they're not thinking about, and they're not really overly concerned about the rate increase. It's more like a buyer or someone having to sell for whatever reason type of thing. Much smaller market compared to the majority, where in Canada, it's pretty much every mortgage is like a 4 or 5 year term. So now people are like, my mortgage is coming up for renewal in the next year. What do? I'm locked in at 2, and potentially now it's going to be at 5.5. That's a huge jump, right? So I see that. Obviously, people in Canada see that, but now I kind of see the perspective of U.S. case. So that may have me place more focus and emphasis on U.S. investments because of that. But in general, with the fluctuation this year and still a disconnect between buyers and sellers, I've kind of slowed down my acquisition and being a lot more conservative underwriting and really hunting for some good deals. And what I'm seeing is they haven't necessarily translated. There's still a disconnect. Sellers are still expecting higher. They're rather sit in the market a lot longer, waiting for someone to pay for a premium, versus where if you underwrite correctly these days, the prices should be substantially lower than where some of these sellers are selling their assets. They're still at the 4 or 5 cap in some markets where they really should be a 7, 8 cap. So because of that, I kind of slowed down the acquisition side. But however, I mean, it's brought another opportunity for me. Private lending has been beneficial for me to make my money work. I've been private lending it at substantially higher rates than maybe earlier in the year or last year. I mean, money's got to flow, and people need money either for deposits or other rehab and so forth. So I've got a solid network of other investors I trust. So I've been doing some loans that capacity, and it's been good for me. Versus previous years, it may not have been as interesting, but with the climate of this year, it's been something I've done a lot more.
Yeah, I think that makes perfect sense. And this is something that we talk about a lot on the channel, right? Is have various exit strategies and also employ various strategies, right? If the market doesn't make a lot of sense right now to be doing a flip or even something like a burr, this could be a great opportunity to build out your network, build out your skills, and employ some of these other strategies, leveraging other people's skills, right? Whether that's partnering with new people or whether that's lending rather than deploying your capital on an actual project. So Thomas, I can tell you're going to be a great addition to the Canadian Real Estate Channel, and I'm really interested in hearing more actually about some of the strategies between systemizing, setting up the systems processes, management, operations, tenant placement, evictions, and just generally the management of these different ventures across the border. And I know that you're going to, be producing a few videos with us on that. And I think everybody's going to benefit from that because we're all looking, right? We've all looked at sort of some of those cheap properties, maybe in Michigan, or we've looked at property in Arizona for those snowbirds. We've looked at Florida. I know there's a lot of viewers that are interested in this type of content, and I'm very excited to hear your perspective. So just looking forward to it, Thomas. I appreciate you coming on today and sharing that with us.
Absolutely. Thank you for having me here. There's a tremendous amount of interest from Canadians to invest in the U.S. So I'm happy to be a resource and just share what I know. But it's definitely for people who operate specifically in Ontario, there's hope. I know how it is investing in a rent control market with, price points and negative cash flow environments. There is hope. There are markets that are landlord friendly, that you can evict people in a timely fashion, that you can raise rent to whatever you want. So definitely hope. So I want to encourage you all.
Yeah, it's not all $1 million properties with $2,000 a month in rent where you can't ever get any sort of resolution if there's an issue. And I think that that is going to be a really well received and honestly fresh perspective, Thomas, because I know a lot of our viewers may be in the GTA or close to that,
Yep.
or somewhere along the 401, and we're all playing by the same rules here with the Landlord Tenant Board and the Residential Tenancy Act here in Ontario. And it has certainly not been favorable. So if you're watching along and you're interested in investing in the US or just hearing about other markets and some different perspectives on standardizing your processes and how to run these things, stay tuned, because Thomas is going to be shooting a bunch of videos with us. We're going to be sharing his knowledge and insights with you. And that's one of the best ways you guys can learn. Like Thomas said, once you get organized, once you start looking out for what external resources there are to help you systematize and process your business, you can grow a portfolio pretty quick, right? It's not that hard. It's actually it's simple. It's maybe not easy to invest in real estate, but it is simple. And a lot of it comes down to what you know and who you know. So now you guys know Thomas, and I'm looking forward to hearing more from him on the channel. So if you guys haven't already, please like the video below, subscribe, you know the deal. And that's how you're going to actually be able to understand and know when Thomas actually has videos coming up live on the channel. So get that done, and we'll see you back here soon. Cheers.
Thank you.